I'm Joel McCower here at GreenBiz Studio with John Colas. He's a partner at Oliver Wyman Financial Services and co-leader of Oliver Wyman's climate and sustainability platform. Hey, John.
Hi, Joel. Pleasure to be with you, and thank you for the opportunity to share perspectives. And congratulations to you and GreenBiz on yet another excellent event.
Well, that's all the time we have. No, just kidding. Thank you so much for that. So, John, we want to talk to you about this Commodity Futures Trading Commission, this U.S. government entity, and the role you played in the climate-related market risk subcommittee. You came out with a landmark report earlier this year talking about the potential risks of climate change on the financial services industry and financial infrastructure globally. Talk a little bit about what you thought were the most striking parts of that report.
Well, thank you, Joel. And it was a privilege, certainly, for me to serve on the climate-related market risk subcommittee and support the team in preparing a report, which, as you may know, was unanimously adopted at committee within the CFTC. And I also want to applaud the efforts of acting chairman Benham in providing the framework and leadership in which that committee was able to be established. And as you know, it was the first report produced by a private sector body and submitted to a US federal agency. So in many respects, the efforts really led the current administration, and we produced the report under the last administration. So it's a real credit to everyone on the task force and the committee in bringing forth the recommendations. What I think stands out most from the report in terms of managing climate risk in the US financial system is just the willingness and readiness of the supervisory community and practitioners to acknowledge climate as a financial risk and the need to advance regulations, policies, and frameworks to help ensure the stability and resilience of the US financial system with respect to climate. And there are many recommendations in the report. Obviously, the most important one is to recommend putting a price on carbon. That is obviously something that's been talked about for decades in the sustainability and climate science world. But nonetheless, it's featured prominently in the recommendations. But there are many more recommendations in the report, which I think are really speaking to global alignment and coordination in terms of how policymakers can learn from some of the practices that are happening outside the United States and continue to embrace and embed what we ultimately would view as constructive and helpful approaches to not only protect the stability and resilience of the US financial system, but to also help our financial sector promote and finance the transition to a low carbon economy. And some of those recommendations include the work that the NGFS has done. Since the report has been issued, you would know that the Federal Reserve has joined the NGFS. So there's a lot that's happening, a lot of reflection that's going on in terms of how to embrace scenario analysis, what other approaches can be productive. But overall, the main message of the report was certainly to acknowledge climate as a financial risk and to set forth a series of recommendations to promote and protect the resilience of the US financial system.
So that is an important thing. And I'm wondering how much of this needs to be policy driven and how much of it can be done on a voluntary basis by banks. They all seem to be leaning into any number of climate related financial products and services. For example, their own footprint, the footprint of some of their clients. Is what's required here federal intervention?
No, I would say, Joel, that in essence, climate as a financial risk is something that the industry is acknowledging and the industry is working toward. I think from a supervisory perspective, it's not so much that there needs to be highly prescriptive regulation. It's more that there's an element of continuing to advance understandings, learnings, sharing of practices, and that the industry as a whole converges in terms of helping to establish better data, better disclosures, more meaningful insights in order to make better decisions. So it needn't be a regulatory burden that emerges. It's more a risk awareness and embracing and building of capabilities within the industry to do scenario analysis and to integrate climate risk in what are otherwise very strong risk management and governance practices within the industry.
Are there any lessons here for other corporations that don't happen to be in financial services in terms of how to think about or embed climate change into their own strategies, operations, value chains? What's the lesson here?
Yeah, I think the big lesson here is that ultimately it's important that institutions, whether they be financial institutions or non-financial corporates, that they think long and hard about the implications of climate on their business, on their customers, and on the opportunities and risks that it presents to them. So much of the work, as you well know, Joe, given your leadership with GreenBiz, is that much of the thinking around climate and climate risk has often been driven by chief sustainability officers and folks who lead through corporate social responsibility. And now what we're seeing is the important integration of the thinking that's been embedded in the sustainability world into the finance and risk functions, whether it be in a bank or in a corporation, and working through what are the methodologies and approaches to define that risk, to identify it, how should it be reflected in policies and commitments from the top of the house down? And then what are the disclosures and reinforcing metrics that companies will use to demonstrate progress in building that resilience around sustainability and climate?
I've long said that sustainability is way too important to be left to sustainability departments. And that I think is just as true for banks and financial institutions as it is for everybody else. John Colas is a partner at Oliver Wyman Financial Services and co-leader of Oliver Wyman's climate and sustainability platform. Thanks so much, John.
Thank you, Joe. It's always a pleasure.